thing.
All right, excellent.
You want to give that a shot?
Yeah, so we'll kick it off. So we're here today talking about cannabis and banking. This has always been a hot issue. Everybody's kind of familiar with it now, that it's a big issue, it's a big problem. The legislature's finally listening. The courts have weighed in. And this really follows an article that we had submitted following the Fourth Corner Credit Union decision out of the federal court in Colorado. So what are the problems here with the banking, and why is it such an issue? Aside from kind of the regulatory, we have some very practical things, like money smelling. Believe it or not, this odor sticks to basically everything it touches. So a practical problem is actually depositing money in an institution that literally smells. And what we're finding is that clients are starting to, believe it, like I mean this in the most literal terms, wash the money in a dryer. So they'll actually put dryer sheets in a dryer and run that in the cycle to get the smell out of the cash to then try to deposit into the bank. It's kind of funny that way. But we have this smelling issue. We have depositing that money. We have the requirement that these businesses have to have safes and vaults. Transporting cash, always a big issue. And really what this all boils down to is the government really treating the cannabis industries like money service businesses. And by that, we call them MSBs in the legal financial world. But what that means is a money service business is one that deals with cash. So these cash checking businesses, money exchanges, travelers check stores, and the U.S. Post Office, believe it or not, qualifies under a money services business. So more scrutiny focused towards a money services business, and that's what we're dealing with. So we have these problems, okay? What do you do with it? And clients come to us all the time, and we always have the same answer. There's no good answer. This is what we do is we tell them, all right, here's the status of the law, guys. This is what you want to follow, and then we'll talk about some things to be done to kind of get around or through the banking issues. So we start out just talking about the law, and I'll run through this because I know everybody on the call is a fairly sophisticated party, and the members certainly have been following this. So we'll just run through this real quickly. But just to let you know, these banks, the reason why, if you don't know, the reason why they don't deal with a lot of the cannabis industry is because of the insurance requirements they have to have with the Federal Depository, FDIC insurance, of course. So really a nice example of this gone wrong was a recent webinar put on by Green Flower Media out of California, I believe, and purely educational, was always up front, this entity, Green Flower Media, with their bank, who happened to be Chase Manhattan, about their activities, that they were involved in cannabis, but that it was all educational. That was all fine. They put on their webinar. It was a 2-day webinar. I listened to the whole thing only because I was shoveling snow here in Philadelphia, and I had the earplug in. But what happened was Green Flower Media offered a bonus package that members could purchase, or those who signed up could purchase. Chase Bank shut their accounts down the day that they put on the webinar. So nobody who had paid to get the bonus packages could get anything because it couldn't process the payments. So this is still real-time, in action, very practical, really hurts a lot of things, and that's why we really need the federal government to take some action. And we're seeing some state action there too. But really, what's very interesting is we went and looked at one of the, as all the members probably know, they have these suspicious activity reports that have to be filed pursuant to the Financial Crimes Enforcement Network. And so we went and looked at what does that actually mean? And Ted really dug up the hard numbers on how many SARs are we talking about being filed and who's filing them.
This is from FinCEN, and it dates only to January 26, 2015, and actually the period that was run dates from the Cole memo from February 14, 2014 through January 26, 2015. And during that period of time, marijuana-related suspicious activity reports numbered 3,157. So that ran the gamut from mortgage brokers to banks to credit unions to even a couple casinos. And what they were doing was simply reporting under the 3 different types of SARs that address marijuana, which is a marijuana limited SAR, which is the least alarming, and it's basically that the reporting institution, the reporting financial institution, is simply saying that that it's a marijuana business, but none of the elements of the Cole memo are implicated in it. So it's a relatively safe business. However, they have to report any type of activity involving a marijuana business. The second element was a marijuana priority, which is it may implicate one or more of the 8 directives coming out of the Cole memo, and there is a heightened level of concern, but not serious. And then the third is the most extreme, which is the marijuana termination, meaning that not only do they report the suspicious activity, but they send a narrative to the Treasury Department that simply says that we're terminating our relationship based upon what we think are violations of the guidelines that were set forth. So over this period of time from February 2014 to January 2015, 3,157 marijuana-related SARs were received. Unfortunately, they don't break down which of those 3 areas that these SARs hit. However, of that group, 249 banks reported the SARs, 71 credit unions, 37 securities brokers, 10 money services businesses, 1 mortgage company, 4 insurance companies, and 2 casinos filed these SARs. So it is. We may think it's simply a bank or a credit union. However, it's widespread and it's systemic. And so the concern for businesses are that they comply with every element and stay clear of running afoul of anything that would suggest a violation of one of those 8 guidelines that are produced in the Cole memo, or the guidance that was issued in February 2014.
Yeah, and I think the issue was we thought we had some good guidance with FinCEN on these SARs. We had been reading numbers that about 30% of all cannabis-related entities were handling, did have bank accounts with financial institutions, credit unions. But after this 4th quarter credit union opinion, we see that FinCEN's just not good enough. The courts aren't going to enforce it. The courts have been very clear, and specifically Judge Jackson in Colorado has been very clear that it's just not good enough. The courts aren't bound by FinCEN guidelines, and they certainly can't enforce them. They're nothing but guidelines. So they really kicked it to Congress. So what's Congress doing, right? I think everybody now knows about the CARES Act, and I'm not going to talk too much about that, but it's a House bill. It came out of the House. It gives some safe harbors for cannabis businesses, and it even addresses real estate. So those leasing or selling real estate, the cannabis-related industry, also not subject to prosecution, right, by any federal agency. And the other thing that the CARES Act does, and I just want to mention it very briefly, is it reschedules cannabis from a Schedule 1 to a Schedule 2. This is a hot point of contention because really this is another webinar. I'm jumping ahead, but when you go to reschedule something on the FDA guidelines, you look at the various schedules. To say marijuana should be Schedule 2 is really a disservice. Schedule 2 includes cocaine, methamphetamines, really not something that cannabis should be classified as. In my opinion, it really should be a Class 5, which is your Tylenols with codeine, stuff like that, really fits into that category better. So we don't love the CARES Act, but in the spirit of compromise and getting something through, wouldn't mind seeing that going past. Also have the Marijuana Business Access to Banking Act. That was the federal law introduced by the Colorado Perlmutter, the representative out of Colorado, Perlmutter. Safe harbors, real estate, a lot of the same language as CARES on that. And then we have a companion Senate bill, Senate Bill 1726, same type of language as the House Bill 2076. We also have the Financial Institutions Customer Protection Act. This was really not initially geared towards cannabis, but it's a fairly new development. In early February, I believe it was February 4th of 2016 it was introduced, and there was a hearing on this bill, which essentially prohibited the federal agencies, including the banking agencies, from terminating bank accounts simply because of the nature of a business. Now, it didn't say specific cannabis, but Representative Perlmutter tried to add amendments to it to include cannabis accounts. They did hold a hearing. Unfortunately, we know where this went. Otherwise, it would be big news. It was struck down in committee by a vote of 3-9, and that vote was right across party lines. Dems for, Republicans against. You know, on previous webinars and writing articles I've written, I've advanced that this isn't really a partisan issue. That there is support amongst Republicans as well as Democrats for this. This vote doesn't really seem to indicate that. So maybe overall cannabis medicinal quality, there is some partisan across the party line going on, but when it comes to financial institutions and banking, we are seeing straight party line splits on those votes. Oregon just introduced a law. It's out of the House and the Senate. Now we're seeing some states kind of taking the bull by the horns, if you will, and introducing their own banking laws on this. Unfortunately, I don't know how it'll ever go far enough. A lot of these laws, Oregon has a law, Nevada has a law, they're very different laws. I'm not going to go into details of each one of them here today, but essentially it says, okay, bank, you can be a bank or in Nevada, a thrift company, and that's a whole other definition we can talk about, but you can be a bank in our state, and you can be privately insured in our state so that you don't have to worry about getting the FDIC insurance. Unfortunately, it would seem to me you still need a master account, which is the problem that Fourth Quarter Credit Union ran into. So, unfortunately, I think the efforts amongst the states, while laudable and good, and does move the ball forward, and it's something we do need, really will never go far enough.
We try to chip away at some of the fear that these institutions have against having the federal government come down with a hammer. Because when you're subject to the Patriot Act, RICO complaints, the Banking Security Act, when you have all of these regulations and it's an overwhelming tidal wave that comes against you, what you have to do is approach it from different angles. Whether it's the CARES Act, whether it's the Charlotte's Web Medical Access Act, which doesn't deal directly with banking, but limits some of the prosecutions that could occur. And again, with some of these other bills that are proposed, it takes different approaches, and what it's trying to do from all different angles is normalize the approach to marijuana, medical marijuana, and how it's approached, even if it's tax issues, which we'll address at a later webinar. So all of the legislation that's out there, as frustrating as it is that it's taken time to even get out of committee, there are very creative people in Congress that are approaching this from many different angles, which offers us optimism that as we go forward, whether or not it's a sweeping bill that strikes down all the prohibitions, or whether it's a piecemeal approach that gets you to the same place, that's what you have to take from this.
So what are we seeing? And really our members are probably most interested in hearing this part. What are the solutions? What are the creative solutions that we're seeing in order to get around the banking, because the industry isn't slowing down at all. All the major financial banks, all the major investment firms, we get reports from financial experts in the field who are very, very bullish on the cannabis market nationally. Invest, invest, invest. They say to do it, but yet we're getting this push and pull between those who want to invest and banks. A very thin line to walk right there. So what are we seeing? What are people doing? Well, we have bad acts and we have creative acts, okay? Some bad acts, okay, just to get around it. People, what they will do, they'll commingle funds. So they'll just shift money from one bank account to another, or they'll just deposit money into one bank account under, trust for the Flowers heirs, and then hope the bank doesn't figure it out until some later date, and that later date, they don't know when that's going to be, and then they play the game. It's like hot potato. They jump from one bank to the next. They're kicked out of one institution, they go to the next. There's a famous, well, and now it's infamous story by the owner of MedMen. Our members probably, if you followed any of this, would be familiar with that entity. Jumping from one bank to the next and telling you in great detail how he does it. It's terrible that you have to do that. Other entities, other cannabis entities, they're creating that holding company scheme, right? So it's the shell game. So company A holds this, it's purely management purposes, and I'll manage the funds of company Y, and then company X can make those deposits, and they have a lease agreement with company Y, who then pays back, and da-da-da-da-da. connect the dots, and you can try to play the shell game. It's never something I recommend to a client. What else can you do? You can lie to the bank. Just flat out lie. That is something that happens. I've had clients come and tell me, hey, listen, we weren't truthful. What do we do now? Now they're asking too many questions. I say, unfortunately, probably best is to close the account and move on. But they lie to the money. And then the other thing is washing the money. Now, I told you before about the literal washing of the money, but now just in the traditional sense, washing money. And for those people who don't know what that is, that's literally saying that you have one business that made X number of dollars, and you're inflating that amount to cover the income you received from the other cannabis business. So you made $1 million from the cannabis business, you made $3 million from the leasing business, you just say the leasing business made $4 million, you pump the money through that business and you make all the tax returns and financial reporting that way. Of course, it's a lie and it's never good, we don't recommend it, but these are the things that we're seeing. You got the state you got some legitimate efforts too, right? You got the state efforts coming in, we had the fourth quarter credit. We have an entity that Ted's been doing some research on in Oregon.
It's actually, it's a success story. It's Maps Credit Union out of Oregon, and what they found when they were doing their own due diligence, they recognized that one of their clients was a dispensary, and they had two choices. One was to simply shut it down, shut down the account, or come up with their own system in terms of how to address it and keep it viable. And they've grown to close to 50 dispensary accounts out of close to 350 in Oregon right now. And what they've done, they've been very aggressive in terms of maintaining their own version of law and order to be compliant. Not to say that they've cozied up to regulators, but what they've done is they've had very good relationships with federal regulators. And what they've done is taken a zero-tolerance approach with their customers. They don't advertise aggressively. They take their clients. They vet them extremely well, but they have standards. And if you violate any of their standards, there is no, as I said, zero tolerance. There is no black and white. So what they do, they require their customers to go through annual inspections. They go through background checks. They cross-reference receipts with tax returns. And if anybody violates anything, they're out. They cancel the account of one of their customers solely by delaying or by not having a timely annual inspection conducted. So, and one of the things we suggest to our clients is simply that establish good relationships with your banks, the financial institutions that you deal with today, because in Pennsylvania, as this grows, they're going to look back and see what kind of customer are you, what kind of relationship do they have, how much trust do they have in you. And what's happened with Maps Credit Union in Oregon is they've had success because of their good reputation and the fact that they have an open book policy. So, I mean, there is hope on the horizon.
And so we like to see these credit unions, these banks kind of come into play. But, you know, what else is happening? So some more legitimate ways of kind of moving this money from cash into a banking system or some system where you can then withdraw it by another entity, because a lot of times in some of these cannabis businesses, aside from dispensaries wanting checking, savings, and debit and credit services, is flat out just loan services. I mean, you literally have issues paying members or investors into a company, in some cases, the states that allow it, out of state. So that becomes very difficult to do. What we've seen is entities either buying real property or buying hard assets and then leveraging that property or those assets. So they'll take loans, mortgages, or money out of the entity, out of the property, whether that be real property, personal property, hard assets, leverage that money, get it out, and then pay out everybody they need to pay out. It's convoluted. It gives you an investment vehicle in the property or the assets that you've acquired, and you got to do something with it now, but at least you're able to legitimately invest it in the cash and then withdraw it through a financial institution. Now the question becomes, how deep is that lender, that bank mortgage lender, for instance, in a real property transaction, going to look to see where the cash came from to buy the real property? You know, traditionally they won't look too far, but you know, truth be told, it's a very new concept. It's a very new thing that people are doing. So we'll wait to see what happens there. There's been a lot of talk about the Bitcoin and the blockchains. I can't tell you, I've seen at least 5 different startups in this space with my own eyes, literally in angel investor fundraising networks right here in Philadelphia, that are trying to push these Bitcoin blockchain type of systems forward. And if the members aren't familiar with that, Google Bitcoin blockchain. It's well out of the realm of our discussion today, but it's something that works very well. Problem is, you're still not dealing with banks and hard money and financial institutions or credit and debit services. It's just not there. We do have software and companies. I'm aware of companies. I have one client right now who has software that is trying to make FinCEN just easier for banks to comply with. Now, in light of that fourth quarter credit union opinion, I don't know how much that's going to be worth moving on, but we do see those types of systems, and he's not alone in that field. So literally, just for instance, it takes about it takes a bank regulator when they're making these SAR reports or the FinCEN guidelines, one regulator for every 1 or 2 cannabis accounts. Compare that to a normal situation where you'd have one regulator to every approximately 100 accounts. So this software makes it easier to kind of push the envelope to get to that of 100 account number. The other thing you can do is just deal with the banks. And this is something Ted said earlier. Get a good relationship with the bank and see if you can do it. That's really what I push forward. And a client going into a new state, I just had one going into Oregon. I think the conditions are fairly favorable there for banks to take it on in light of the law that's simply been passed, the House law that came out of the House and Senate. It's going to be signed by the governor. It's almost assuredly going to be signed. And so I'm sending my clients out to banks in Oregon, telling them to schedule meetings and do that, because really that's the best of all worlds. And so very finally, and then we'll just take some questions from whoever would like to ask, but what are the opportunities in Pennsylvania? I mean, what are these? What do these mean for our members? This is a robust opportunity. There are opportunities at the wazoo. I'm aware of Nevada. I'm aware of Oregon. There's banks in California, M-Bank, Kind Financial. Kind Financial, by the way, started by a Philadelphia area native by the name of Dinnenberg. Great guy, started a bank out there, got into the banking services industry, kind of backed out of that a little bit and took on some seed-to-sale tracking services as well. So his institution not only will give you credit debit, but will also give you seed-to-sale tracking, which is important, I think, to then tell the banking regulators that they have to deal with, hey guys, we're not only just taking the money in, we're seeing exactly where this is going from point A all the way out to the point of sale. So I think that's very important. They're having a lot of success out there in California. Just real quick, I thought it was very interesting. This was an article I actually read just this week, was stats on where the money's coming from if it's not coming from banks. And really traditionally for our PA members, a lot of this money, a lot of your money is going to come from family and friends, right? The angel investor type people of family and friends. And so what does that look like? What are people paying on that? It averages 11%, which is pretty good. 55% of those cannabis businesses were actually getting interest rates at 10% or lower, which is a very nice thing. Compare that to normal rates right now going about 4.75 to 8.25% normal loans. So you're just getting a couple upticks of points in there for hard money through family and friends investments. But I think is very good news for anybody trying to enter this space, and something that for members trying to raise money, they may want to point out to people. It's not 20, 25, 30%, although there are numbers in that range for a small proportion of cannabis businesses. But the vast majority are under 11%. So we have 55% under 10%, and then that 11%, you're over 60%. So the majority is under that 11% range. So lots of bullishness by the financial institutions to get in this area. We're seeing the banks back away. So we're in a dance right now. We're in a little bit of a tango with banks, and we're going to see how that plays out. But one thing's clear: the courts won't do it, and it's going to have to be left up to federal law to change.
Now, the guidances are great, but the guidances can change daily, and nobody's bound by them. It's an act of Congress that'll change this.
So I'm sure we have some questions out there.
We do. Let's see if we can get Tom. I had his question here. Are banks advocating for change? That was kind of a question I had, too.
Yeah, right. So incredibly, I'm sorry to cut you off there, Sven. I got the question on the screen here. There's very little guidance from bank regulators themselves. We're getting almost nothing from them. So silence is deadly here because we have no idea what they're saying. We don't know where they're coming from. You know, some banks are doing it, others aren't. We obviously have the Federal Reserve Bank, the Federal Reserve, not bank, but the Federal Reserve, which is actually a private agency that wouldn't issue that master account in the fourth quarter credit union opinion. So, you know, all we know for now is the regulators are kind of letting things go, but not too far.
Well, because the banking association itself, they don't know what the guidelines are. They see the Cole memo and they see what's out there, but there's an implicit, it's illegal. It's an illegal drug, and if you're involved with it, you're subject to prosecution. And this is not simply prosecuting the bank, it's prosecuting the individual officers. So there's some reticence that's across the board from the banking arena itself.
Yeah, but we're dying. I would love to get a memo of something from the Reserve or any one of the banking regulators, FDIC, whatever it might be, to give some guidance. I don't think we're going to see it, though, Ted.
No.
Now, you guys talked about the SARs, and that's where these reports are filed by the banks or these other the money institutions. Has there been any crackdowns on banks from anywhere, any regulatory agency? Is it all fear, or has there been actual crackdowns of banks?
Well, I think the fact that the banks are self-regulating in terms of monitoring, issuing these reports, being aggressive about it, and terminating accounts, as Justin was talking about with Chase terminating account. Wells Fargo's done it. They themselves have done it, so Treasury has not had to step in.
Yeah, we're not aware of, and that doesn't mean it doesn't exist, okay? But we're not aware of the Department of Treasury coming in and saying, or FinCEN coming in to saying to some of these banks, shut it down, close it down now. I think it comes down to it's just cost prohibitive. It's cost prohibitive for these banks to deal with the cannabis industry. And to be perfectly frank, while the cannabis industry is exploding, I mean we're on track for $8-10 billion. Pick a source and pick $1 billion number. That's where we're going. It's huge. But keep in mind of all the industries that these banks serve. A bank like Chase. I mean, unfortunately, the cannabis industry, it's just not the biggest industry. So they have to weigh that. And when it comes down, if it's costing them too much money to do, and it's not their biggest industry, and they may deal with some problem down the line as far as enforcement, well, then it just becomes not worthwhile for them. But I think it's very disingenuous for them to accept an account and then deny it so quickly.
But that's where a lot of the activity can come from, these smaller local banks and credit unions that we see that you'll drive past and not know it existed. We think that's what may be a growth area because they're willing to take that risk because they have a higher ceiling to hit.
Right.
Will we see a change in the attitude in banking with the new administration, you think, next year? We don't know whether we're going to get a Democratic president or a Republican president, but what kind of changes do you foresee, if any?
Well, I can tell you this.
We need that kid again.
Yeah, where's that kid again? You know,
where's that kid screaming when you need him?
Look, we have Trump, who, I don't know, who we're not going to get into a political conversation, but he's going to let the cannabis go. Okay, so I'm not saying he's going to be the guy, but he's the Republican guy who's going to let this industry go. Clinton is a little less timid, and then you got Bernie Sanders, and we all know where he stands on this issue completely.
So all of this could change within a year anyway. I mean, really, all three look like pretty different plans going forward.
Yeah, I mean, unfortunately, I just want to say, I don't see the banking issue changing at all. I don't see the president having any influence over the banking issue. Possibly reserve Sanders on that, but keeping in mind that the House and the Senate are both controlled by the Republicans. So he's going to have a long way to go to get anything passed that way. It's going to be hard, I think. So I don't think, no matter who's the president or what administration is in office, is going to affect the banking industry. For cannabis, in my mind, the train left the station years ago. And for a new administration to come in and say, we're not going to let this go, we're gonna now clamp down, I don't think is realistic at all. Yeah.
Well, we're coming up on 30 minutes here, so let me just ask one last question to kind of wrap it up. And this will help you kind of reiterate some of the strong points in your presentation. So what's the best advice then for somebody that wants to get a license and wants to try to find a bank that will do some of that wink and nod and a handshake kind of business that we talked about in our podcast back when? What's the best advice for Pennsylvania cannabis businesses? Go small.
The best advice is developing that relationship today that you want to have, that when we do get the legislation we want, that these relationships will flower. Pardon the pun, because that's what you want to try to do. Because the banks themselves can be helpful. They themselves are moving in the shadows, so that's why there's a little more concern and a little more reluctance to jump in. But the more comfortable they are with their customers, the more open-minded they'll be in terms of giving an opportunity, essentially.
And just to kind of piggyback on that for one moment, just to close it out, the real property hard asset issue and leveraging that is something that I think can be done by really sophisticated parties. So if you do the wink, nod, and a handshake with the bank, fine, but you may want to lay some groundwork with existing real properties, existing assets for a member who wants to get into this, who already has a business, to then get involved with the bank that way and float these ideas to them, because there's money to be made not only in taking your account, but then also in leveraging a lot of this real and personal property.
No, and you have to be open to challenges. I mean, you have to be open to following a very rigid set of guidelines to be compliant, to be successful. But I mean, that's what we're confronted with. But I have not met anybody to date who's not willing to go that road.
Well, guys, this has been amazingly informational. There was a few questions we didn't get to. Maybe what we can do is email you those questions, and then we'll continue this conversation on our website, and we'll get this recording out to everybody who signed up for the podcast as well. And really great having you, Justin Moriconi and TFlowers with Segal, McCambridge in Philadelphia. Thanks so much for being with us today.
Hey,
thanks, Sven. And to all the members, make sure to tune into our next webinar coming up in a couple weeks on the IRS.
Absolutely. And if you're going to be around on March 11th, please join us in Pittsburgh. We're having a social function where we can all meet face-to-face, the HYP Club. All right. Thanks, guys.
Thanks so much.